Hi, this is Zak Mir with the US penny stock highlights for Friday, the 31st of July. Starting off with BioLine, where it looks as though we've broken out of that triangle in place on the daily chart since December versus $2.20 at the resistance line there. End of day close above that could take us on the way to the top of the channel, promising a $3.75 plus target over the following 4 to 6 weeks. Stop loss quite handy as well around the $2.05 level, which is the current level of the 200-day moving average, and only back below the floor of the channel at $1.83, really delaying the upside scenario. Next up, a stock which is new to the this particular video, CANGO. Here we've got a situation where the shares have gapped up through a line of resistance in place on the daily chart since January. That's running really against the $5.40 level, so end of day close above $5.40 is what we're really hoping for here. Otherwise, at least while we're above the floor of the gap, the floor of the gap at $5.10 on an end of day close basis, we're still in a bullish kind of persuasion and looking for a move up towards $7.30, which is the top of the broadening triangle on the daily chart from April. Otherwise, hopefully we'll have that end of day close above 540 today. Another stock to keep an eye on over the near term, Huttig. Here we've got the stock flying through the neckline resistance on the daily chart at $1.83. So above that, we're on an end of day close basis. We're still hoping for higher prices. Top of the channel there from August last year, basically this time last year at $4.30. So that's the big target over the next 1 to 2 months. But the risk reward here is that you're literally only going to allow down to $1.83 on an end of day close basis in order to get upside of over $2, hopefully. So risking about 30 cents to make $2 plus on that situation. Next contender is Kingsway Financial Services. Here we've had a nice break of the neckline resistance from October. That was running at $2.40, so above that, looking for the top of a broadening triangle on the daily chart from back in May last year at $3.50 over the next month or so. You could have the stop loss, I suppose, from $2.40 would be the ideal, but maybe you could stretch it just below $2.50, the recent swing low, or just below the recent swing low on that situation. Leaf Group, the next stock, and here you can see that we've had a classic triangle break with the triangle in place really since, the early part of November. The triangle broken at $4, let's call it $4.45, so above that on an end of day close, looking for a top of triangle target up to $7.40 over the next 4 to 6 weeks. Only at this stage, only back below the uptrend line from April, $4.10, really delaying the upside scenario for Leaf Group. Next stock to look at is one that I've looked at many times before, and given the way that the stock has spiked up today, it's probably a good thing that I have. We had the initial break here at the beginning of June with that resistance line broken from January. Since then, we've got this U-shaped bull flag, I would call it, or fishhook, some other people would call it. The view here is at least while we're above initial July resistance around 360 on an end of day close, we could still retest the $4.80 area, which is the July peak, was the initial July peak, and then hopefully hoping for a retest of the big target there, which is a line of resistance from way back in August 2017, back up near the $7 level. Next stock to look at is OFS Capital, another new name for this particular show. Here you can see that we've had a falling wedge breakout via a gap, which are normally decent signals. The situation now is that the line in the gap went through the $4.10 level, and while we're above that on an end of day close basis, looking for $6.50 plus at that late March resistance line projection. That could be hit over the next 1 month to 6 weeks. Yet another new name today, and here we're looking at Sonnet BioTherapeutics. Obviously, the whole pharma bio area on fire at the moment. Thing to look out for here really is that neckline resistance, which was broken. Let's call it $4.95 to give it some wiggle room there. And above that, looking for continued upside, obviously not only retesting the spike we've had today, but hitting the top of that broadening triangle towards $10.50 over the next 4 to 6 weeks. So in this case, above $4.95, looking for $10 plus on Sonnet BioTherapeutics. New name again today in the form of TRIOTECH, and here we've had the shares hitting the top of that rising trend channel from February around $4.50 mark. What we want to see now really is that the shares managed to maintain the $3.70 area, which was resistance on the way down. Above $3.70 on an end-of-day close basis, we could at least try and retest the $4.50 area at some time over the next week or two. The other stock of the week, apart from Kodak, which went up from $8 to $60 at best, is Tiziana Life Sciences. Not quite as spectacular, but not much less spectacular either, actually, it has to be said. Here we can see that the shares have basically climbed within that rising trend channel in place since the end of the year, hitting that the price channel top at $12. Current situation is that we're looking for support to come in around the $680 level or above, hopefully, which would basically mean that yesterday's resistance rather came in as new support. Above 680, looking for a retest of the $12 area for Tiziana, even though obviously we've had a very good run indeed over recent days. Last stock of the day and the week is Unum Therapeutics, and here we're just in this hopefully mid-move consolidation bull flag situation, looking for $3.10 to be broken on an end-of-day close basis, breaking that July resistance line. If we can do that, then the upside here could be the top of a rising trend channel from last August, heading as high as $5.20 over the next 1 to 2 months. Stop loss back below former neckline resistance around the $2.30 area. That's it for me this week. More updates on Monday.